Hello, everyone, and welcome to our exciting journey into the world of accounting from Frank Wood's Business Accounting. Today, we're diving into chapters 38 and 39, focusing on two fundamental topics: an introduction to accounting ratios and the analysis and interpretation of accounting statements. These are essential tools for anyone engaging with the financial side of a business. To begin, let's explore accounting ratios. Ratios are powerful tools that provide insight into a company's financial health. They allow us to evaluate a business's performance by comparing different line items from financial statements. There are various types of ratios, such as profitability ratios, liquidity ratios, and solvency ratios, each serving a unique purpose. Profitability ratios measure how efficiently a company generates profit. Liquidity ratios assess a company's ability to meet its short-term obligations. Solvency ratios, on the other hand, evaluate long-term stability. Understanding and calculating these ratios can help businesses make informed decisions. Next, let's transition to the interpretation and analysis of accounting statements. Financial statements are the backbone of any accounting analysis, offering a snapshot of a company's financial position. The balance sheet, income statement, and cash flow statement provide essential information for stakeholders. By analyzing these documents, we can uncover insights into an organization's operational efficiency, profitability, and overall financial health. Reading between the lines is crucial to grasp the complete picture. In summary, mastering accounting ratios and the interpretation of financial statements equips you with the knowledge to analyze business performance critically. It's like having a financial magnifying glass, unveiling opportunities and risks previously unseen. These skills are invaluable for anyone from students to finance professionals. Thank you for joining us in this exploration of accounting fundamentals. Don't forget to like, subscribe, and stay tuned for more insightful lessons. Until next time, keep learning and stay financially savvy.